The Zacks rank, value, momentum, growth, and income all factor into Zacks rank buys.
Well, a networking company and a brand name owner, if that makes any sense to you, are on the radar, the value radar this time around. And Tracey Ryniec, who's our value stock strategist, is going to explain all of that because I might have messed it up going in here. Yep. But the first company, the networking company, is Cisco Systems. That's right. a really...
Everyone knows them.
Yeah.
Yeah, big tech titan, I like to call them. You know, I don't think I maybe never have covered them as a value, even though their valuation has been, you know, fairly attractive for a while. Mm-hmm. But now we've finally got the rank going on with it as well. They're ranked number 2 buy. And like I said, the value is there. They're trading around 14.5 times. That's well under the average of the S&P 500, which is almost 18 times now. Mm-hmm. So, you know, that's a lot different than what it was when everyone was talking about them and owning them back in 2000, when they were trading literally anywhere between 30 and 50 times. So now you finally got a value stock here. You're not really going to get as much of the growth component. You can see the estimates starting to trickle up here for this year and next year. That's the sign you want to see. That's why we got the good Zacks rank. But the growth for this year is only expected to be about 5%. The growth for next year about 7%. But not all value stocks are going to be high growth stocks. Mm-hmm. You get a dividend yield with this one.
I see that.
Yeah, 3%, which is quite attractive, actually.
Yeah.
Remember, you know, 10 years ago, they had all that cash on hand and they were really fighting, you know, paying the dividend. And now suddenly, whoops, now we're paying 3%. Right. And they still have a ton of cash on hand. So if you are looking for, you know, a big cap company that has the value, you get the dividend, mm-hmm. This is an interesting play. Other people have discovered that, hey, maybe this, you know, something's going on with Cisco now, and they've had good earnings reports. John Chambers, the CEO, you know, is very optimistic going forward. You can see the shares hit a new multi-year high here off their last earnings report, which was quite solid, and they've pulled back a little bit, so it's a little cheaper now. So yeah, if you're looking for, you know, the big cap stock with, you know, the good valuations, then Cisco is one to, you know, keep on your list.
All right, and if you're looking for something that maybe suggests a little more fun, then Iconix Brand Group is the way to go.
This is the stock no one has heard of. They are kind of a larger small cap. Their market cap's about 1.7 billion. But the interesting thing about them is that they actually just own brands, right. And then they license them out to everyone else. So they don't own candies except to let someone else make the candy shoes.
Right, they direct the brand.
Yeah, so they own many brands people are familiar with, including candies, but the Material Girl, Madonna's clothing line, they mm-hmm. own a portion of Tom Hardy, which is very popular. They do a lot of like towels for some reason, Charisma and Fieldcrest. I mean, I know what those are. And then they own Peanuts, which is a big thing for them because this year Peanuts is coming out with its first motion picture. They've only had those TV movies, which, you know, many of us love from back in the 1970s. Yeah. And now they're finally starting to really, you know, push this brand, and you know, they're again only on the licensing. They're not the studio making this movie, but right. The movie goes out there kind of like Lego Movie did. It reinforces the brand of the Peanuts, and then, you know, that helps with the rest of their licensing. You can see the earnings estimates. They're also Zacks ranked number 2 here because they're starting to climb. They beat again last quarter. They've only missed twice in the last 5 years, so they do have a good track record of beating. The problem with Iconix Brand is that no one really knows who they are. They only have 150 employees because all they do is the licensing. Mm-hmm. But people have been fleeing the stock, even though the fundamentals are still good. So starting, you know, last year, you see this decline here. I put up the 1-year chart. And then this year, it's just treading water, basically. But it is very cheap, trading 11 times. That's among the cheaper stocks I've seen that are out there, and it does have these good prospects. They also just recently spent $100 million to buy Strawberry Shortcake brand, which, you know, again, kind of from the 1970s Strawberry Shortcake. Right. And, you know, that brand has kind of lost its luster, but they do have a history of being able to turn around these brands and get them out there and really, you know, bring in a lot of cash surrounding these great names. So,
kind of like owning the real estate and collecting the rent.
Yes, yes, exactly.
Is what it's like.
Exactly. So Iconix Brand is a very interesting company, but very different because it's not on anybody's radar like Cisco is.
Yeah. So do you own either of these?
I do not.
Okay. Check out other stocks and stock picking strategies on our website, Zacks.com. If you're not there already watching this video, get on over. You can link to it all right off the homepage. With Tracey, I'm Terry Ruffalo.